Are you looking to grow your money but feel overwhelmed by the stock market? What if I told you there's an easy, cost-effective way to invest that can give you access to a diverse range of assets, all with just a few clicks? Welcome to the world of ETFs. In this video, I'm going to show you exactly what ETFs are, why they might be the best investment choice for you, and how to get started, even if you have zero experience. Let's dive right in. So, what exactly are ETFs? An ETF, or exchange-traded fund, is essentially a basket of securities, like stocks, bonds, or commodities, that you can buy and sell on a stock exchange just like individual stocks. Think of it as a way to invest in multiple assets at once, providing built-in diversification. Now, why should you consider investing in ETFs? Here are 3 key benefits. 1. Diversification. Instead of putting all your money into one stock, ETFs allow you to spread your investment across many different companies or sectors. This reduces risk. 2. Lower costs. Most ETFs have lower expense ratios compared to mutual funds, meaning you keep more of your returns. And 3. Liquidity. You can buy and sell ETFs throughout the trading day, just like stocks, giving you more flexibility. Ready to start investing? Here's how you can get started in just 3 easy steps. First, you need to select an online brokerage that offers ETF trading. Look for platforms with low fees and user-friendly interfaces. Next, take some time to research different ETFs. Look for those that align with your investment goals. You can find ETFs that focus on specific sectors, regions, or even follow indices like the S&P 500. Finally, once you've selected an ETF, it's time to buy. Enter the ticker symbol, choose the number of shares, and hit buy. Congratulations, you're now an ETF investor. Here are a few tips to keep in mind as you embark on your ETF investing journey. First, stay informed. Keep up with market trends and news that may affect your investments. Second, invest for the long term. Don't panic during market fluctuations. ETFs are generally best suited for long-term growth. Third, review your portfolio. Regularly assess your investments to ensure they align with your goals. And finally, consider setting a schedule to invest a fixed amount in ETFs each month. This approach, known as dollar cost averaging, helps you spread your investments over time, reducing the impact of market volatility and allowing you to buy more shares when prices are low and fewer when prices are high. If you found this video helpful, make sure to hit that like button and subscribe for more investment tips. Have any questions about ETFs? Drop them in the comments below. I'd love to help you out. Remember, the best time to start investing was yesterday. The second best time is now. Happy investing!